He never chased the headlines. He built the machine that printed them. From air raid sirens in Budapest to the shouting pits of New York, he arrived with a foreign accent and one radical idea for a world powered by handshakes and rumor. Let the machine calculate what human emotion couldn't. When traders slapped backs and shouted orders, he brought a handheld computer to the floor, mocked at first, unstoppable later. His one-man desk became a laboratory of automated quotes. Spreads tightened. The rhythm of options changed forever. He wasn't learning their language, he was teaching markets to speak his. And when regulations tried to chain progress to keyboards, he didn't break the rules, he outsmarted them. He built a typing robot with rubber fingers, a physical bridge between his digital brain and their analog system. While competitors bought billboards, he built architecture, risk engines that refuse panic, smart routing that ignores borders. Precision sold what marketing couldn't, scaling to hundreds of billions in client assets across global desks. The proof is in the timeline, a proof of concept desk, TP & Co-Iners, 1977, a market-making machine, Timber Hill Inc., 1982, and finally a global electronic broker wiring the world's markets into one disciplined platform. He isn't a celebrity. He's the architect, the refugee who coded Wall Street's algorithmic backbone. Thomas Peterffy was born in Budapest, Hungary, on September 30, 1944, in the hospital basement while Russian bombs fell overhead. His father, an engineer, survives the war, but watches hope collapse again when the 1956 Hungarian Revolution fails. He flees to America. A decade later, in 1965, Thomas follows, leaving behind his unfinished engineering degree to join his father in New York. But the reunion is brief. His father, now remarried and short on space, hands him $100 and says, "Make something of yourself." He doesn't speak English. Within months, he enrolls at NYU School of Engineering, then drops out to work as an architectural draftsman. He learns probability before he learns comfort. In post-war Budapest, air raid sirens fade into ration lines, and a boy builds a survival instinct out of numbers. Under a grey communist sky, scarcity becomes a teacher. At school, he flips that lesson into tiny hustles, chewing gum traded for coins, scrap metal scavenged from bombed shells and resold for pocket money. The young engineer grows precise where life is not. Diagrams and measurements feel sane in a world that isn't. English is distant, mathematics is fluent. In 1965, he gambles everything. One bag, about $100, zero certainty, and boards a plane to the United States. New York is loud, unforgiving, and perfect for experiments. He takes an architectural draftsman job, measuring lines by day, tinkering by night. In a back office sits the Olivetti Programmer 101, a desk-sized computer that most see as an expensive calculator. Wall Street is not a doorway, it's a wall. So he climbs. Programming gigs lead to market data, and market data leads to a question no one in the shouting pits is asking out loud. If options are risk wrapped in time, why are we letting adrenaline price them? Models can do in milliseconds what human instinct takes minutes to do. Long before most floor traders trust formulas, he is living inside them. In 1977, he bought a seat on the American Stock Exchange. He opens a tiny proprietary desk, TP & Company. There's no marble lobby, just plotters, calculators, and scraps of custom code stacked around a table that doubles as a trading station. He carries a handheld device onto the floor and becomes a punchline. Traders laugh at green screens and beeping boxes, then the screen starts spitting prices faster than rumors can run. By 1982, the chassis needed an upgrade. The experiment turns into a firm built for automation, Timber Hill Incorporated. The target is market making, quoting thousands of options continuously with a machine's patience. Rules try to drag progress back to human fingers. So he gives them human fingers, a rubber finger typing rig that physically taps keystrokes while software thinks, a sly bridge between digital intention and analog compliance. Regulators notice, so do rivals. penalties land, hearings happen. What begins as a refugee's side bet becomes a method. The outsider advantage, fewer sacred cows, more iterations, compounds into discipline. Clients don't come for slogans, they come for fills, slippage, borrow, and margin efficiency. The experiment outgrows the pit. Electronic venues in Europe are accelerating, and cross-venue connectivity is becoming the real edge. Cables, code, and routing tables start to matter more than elbows. He formalizes the architecture mindset as Interactive Brokers Group. Market making remains the laboratory, but the new mission is plumbing. Build rails that can seek best price across exchanges before a human can even lift the phone. Margin models move from folklore to formulas. Centralized pricing and risk engines run hotter and more disciplined. Compliance pushes back on pure automation, so the now famous rubber finger typing rig bridges digital intent with analog rules. What began as internal tooling becomes a front end. Trader Workstation, TWS. Multi-asset, multi-market, one screen. Under the hood, smarter routing logic, better risk visualization, and the beginnings of an API so quants can graft their own edges onto his rails. Phones give way to fiber, sneakers give way to algorithms. Dot-com mania, then whiplash. Edge cases expose where supervision, capacity, and routing logic must evolve. Some days end with hearings and fines. Inside the server room, they're labeled tuition. The map lights up: Canada, UK, continental Europe, Asia desks in Hong Kong/Japan come online. Technology teams in places like Estonia extend the software muscle. Thesis, end of 2003, compute, route, hedge, learn, again. The pit didn't disappear, it merely became the UI on top of a system that thinks in microseconds. By 2003, the automation worked on its own rhythm. Quotes, hedges, and routes flowed through software that rarely slept. The shouting pits had become an interface. The engine lived in code. Trader Workstation grew into a multi-asset, multi-currency cockpit. Behind it, APIs opened access, so funds, prop desks, and retail quants could build on IB's rails. What began as an insider's edge started powering everyone. In 2007, Interactive Brokers listed on NASDAQ, ibkr. The filings read like engineering blueprints: capital ratios, latency, margin methodology. Wall Street got a new ticker. The industry saw how the machine was built. 2008 hit. Leverage collapsed across banks. At IB, conservative margin models triggered automatically and early. Volatility became a stress test. Margins tightened. Hedging tools improved, disclosures sharpened. New regulations arrived and were turned into code. Compliance became process, not paperwork. By 2012, electronic brokerage wasn't niche, it was standard. Interactive Brokers operated in 100+ markets, known for best execution discipline, low cost, and risk control. By 2013, the world had begun to think like him. Every exchange, every broker, every trader, all speaking one language here. Algorithms ruled the pits where humans once shouted, but as logic conquered emotion, one question began to haunt the system. Robinhood made trading a game. Schwab sold comfort. Fidelity promised calm, but Interactive Brokers offered none of it. Its marketing was anti-marketing, sterile reports, clinical precision, and execution stats so detailed they felt like autopsies. Then came evolution. The Trader Workstation shed its old skin. Real-time options chains saw everything. Cross-asset margin engines reacted faster than fear. Risk modules no longer flinched at volatility. They hunted it. What once predicted danger now thrived on it. Compliance staged its own quiet revolution. Regulations were no longer read, they were ingested, converted into algorithms, perfected into patterns. Peterffy called it simply, "Bureaucracy is latency wearing a suit." And so, latency died by 2019, the scale turned surreal. Over 1 million orders daily, $160 billion in client assets, 100 markets wired into one heartbeat. And then, the logs began whispering. March 2020. The world stops, markets crash, yet inside interactive brokers, the engines ignite. Margin models built for crisis spring to life, cutting losses in milliseconds. Other brokers freeze, IB executes. While humans panic, code performs surgery on chaos. Then came the meme wars. GameStop, AMC, pure emotion disguised as strategy. When others halted trades, IB adapted in real time, margin raised, filters tightened, risk contained. It didn't judge madness, it modeled it. By 2025, it was complete. 220 markets, $465 billion in assets. The most profitable broker in the world, and perhaps the most unseen, Thomas Peterffy, still visits the servers sometimes. The machine no longer needs its maker. It has a heartbeat, a memory, and a kind of will. The principle remains the same, but the student has surpassed the teacher. He began with nothing, a slide rule, a foreign accent, and the quiet conviction that logic could outlast luck. From the rubble of Budapest to the roaring pits of Wall Street, he didn't just trade markets, he rewired them, one line of code at a time. Every decade brought a new storm, the skeptics, the regulators, the crashes. And every time, his answer echoed the same loop. Compute, route, hedge, learn again. Behind every click, every trade, every flashing price, deep in the hum of the servers, a single philosophy still runs like heartbeat code. Iterate, don't celebrate. Because headlines fade, empires crumble, but architecture endures. And long after the noise dies, the system he built still whispers in binary rhythm, keeping order in the chaos he once faced alone. This isn't just the story of a trader, it's the story of a refugee who taught Wall Street to speak machine. The coder, the architect, Thomas Peterffy.